the gist of Snowflake's business, there's enterprises are creating a lot of data today, and it's spread across a lot of different systems. And so the idea behind Snowflake is to bring all of that data together so that you can use it to make informed business decisions, essentially. So to solve the problem of data sprawl, they've created the data cloud, and this combines a lot of old legacy tools or point solutions like pipelines and data lakes, data warehouses. And the idea is that you can pull that data together, analyze it, build data-driven applications, or even share it. And I'm gonna come back to the sharing point. I think that's particularly important. But I wanted to share my screen real quick. So let's see how that goes.
Looks like you have lots of screens.
I do. Yeah, this one. All right.
You got to be a tech guy. There we are. Awesome.
All right. So this is a few slides from their investor presentation. Let me change how this is to single page.
Yeah, looks good.
All right. So starting with the revenue growth. So the revenue for the quarter came in at 272 million, and that is up 104% over the prior year. So the company's growing very quickly. And then looking at these numbers, the vast majority of that is product revenue. So the company does have a little bit of very low margin service revenue, and that continues to be phased out as product revenue is growing. This growth rate is a little bit slower than what they posted for the full year 2021. So this Snowflake is in fiscal year 2022 now. This is the second quarter. So, but still very fast growth, I think, is the takeaway here.
Can you enlarge it just a bit?
Yeah. Is that any better?
Much better.
All right. All right. Sorry about that. So this next slide is just shows the breakdown internationally. So the company's mostly concentrated in the Americas right now, but they are gaining traction in Europe. So I wanted to point that out. So there's a lot of opportunity for them to expand internationally, and that's something that management has talked about. And then this shows the remaining performance obligation. So this is revenue that is contractually obligated, but they haven't necessarily billed their customers for it yet, or they don't have it on the books yet. And so this figure actually hit 1.5 billion. And I think if you're paying attention to Snowflake, you need to look at remaining performance obligation alongside revenue, because the company uses a consumption-based business model. And so management's always pressing this point. And I think one thing you want to look at here, with 1.5 billion, the growth from the previous year where they were at 688 million, this actually grew 122%. So their remaining performance obligation is actually growing faster than their top line is right now. So another way to say that is that the money that they're going to be making in the future is getting bigger faster than the money they're making right now. So I think that speaks to the company's future growth opportunities. Moving down the rest of the income statement, the company did post a net loss of 64 cents per share. That is smaller than the $1.31 per share net loss they posted last year, but they are still not profitable on a GAAP basis. Also not generating positive free cash flow. They posted a net loss of $12 million in free cash flow during the most recent quarter. So those are, I guess, some of the downsides there. This slide is kind of busy, but there's a few things that I wanted to draw your attention to. First, Snowflake has almost 5,000 customers now. They have 4,990 customers, and that's up 60% over the prior year. So they are growing their customer base quickly, and they're actually gaining traction with a lot of larger customers. So they have 212 Fortune 500 customers now. That's up over 30% from the previous year. And they have 116 customers that have a contract value or that have paid more than $1 million over the last 12 months. So they're gaining traction with these larger customers, and they're growing their total customer base. And then the last big thing here is that their net revenue retention rate actually went up to 169%, which is just incredible. I mean, if you're a software company and you have 120% retention rate, that would indicate that, you made the average customer spent 20% more over the past year than they did in the year before that. 120% strong, 169%, I think, is incredible. And like I said, that number is actually trending upwards. So in the second quarter of last year, that was 158%. And so we saw it go up to 169% today. In terms of what's going on with Snowflake in the market, the stock is very pricey. I think this is the question here is, how long can they maintain this customer growth? How long can they maintain their top line growth? And will it be long enough to justify the valuation? Looking far. So management did provide, they did actually raise their guidance for the full year to their estimating at the midpoint 92% product revenue growth. Last quarter, they were calling for 86 at the midpoint. So this is a little bit higher. But management has actually provided some guidance much further out. They are expecting product revenue to hit $10 billion by fiscal 2029. So we're in 2022 right now. And when they made that forecast, product revenue was just over 550 million. So the growth rate that they're calling for over the next 8 or so years is about 45% revenue growth, which is, much slower than they're growing now. But to be able to look out into the future and say, hey, we're going to grow 45% per year over the next 8 years, that shows a lot of confidence in the business. And I like that enthusiasm.